This is 50 pips, 15th of December, 2013. Not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take, and the fact that you're listening to this means you've read, you understood, you accept all the disclosures, disclaimers on the website, understanding that we're here just performing some technical analysis for educational purposes only. So what's going on, guys, as we're getting towards the Christmas holidays and the end of the year? Keep in mind, this week should be more interesting than last week because we do have some interesting data points coming out, and we have a fairly steady data flow coming through, right? Starting with the overnight session, we've got basically the HSBC manufacturing PMIs out of China. Then we go on Monday with all the PMIs out of Europe. You know, there's a lot of things going on. Tuesday, there's plenty of stuff on the wires with the ZEW in Europe and some data out of the US. Wednesday, again, it's going to be pretty interesting days because not only, you know, apart from some New Zealand data, we've got GPB data, we've got the MPC on the wires, but we have the, you know, FOMC statement. A lot of people are going to be waiting for that, so that'll be very interesting. Also followed by New Zealand GDP, and again, you know, all employment claims on Thursday. You know, Philly Fed. We've got more stuff. We got the BOJ on the wires on Friday. So clearly, there's a lot of stuff going on throughout the week. Also, don't forget that this is triple witching week. So again, could be the last really, interesting week in terms of volatility, in terms of moves before the holiday season. So keep that in mind. I mean, there's not a lot that's been going on. For, you know, we've been moving inside broader ranges. So I'm going to try and go through some quick things which I think are interesting. Gold, I don't think is particularly interesting, but since a gazillion people keep on asking me to review it, I'm going to look at it, but there's not a lot that has changed, right? So we are hovering down here into these lows, right? And we're hovering around the 1250 zone. Now, what we said the other day as this was going down, everybody's getting really excited. We said, you do not want to get excited before we break through. Well, you don't ever want to get excited, but you don't want to get too excited unless we start to break down below these lows, because look at how the market being supported here. So coming into this bottom support zone, you know, much rather be a buyer than a seller here, right? And you see we caught some bids here and moved right back out of the zone. So in terms of the broader outlook, nothing's really changing. For me, it's these 1250s really remain the pivotal level to watch, right? And that means that as long as we hold below that, it's going to be pressure on, and to have pressure off, we'll start to have to see daily closes above to 1250. The broader range, 1300, 1200 here, that's where we're stuck, and this is the pivotal level. As long as we hold here, again, I wouldn't get aggressively bearish at support. You know, if anything, you'd be looking at mid-range, but you just have to let this settle. We'll have to see how the week ends, but clearly, as long as we close the daily below 1250, pressure on. Cautious if you're short if we start to get closes, daily closes above 1250, because those 1300s could come calling relatively quickly. Okay, now in terms of the ES, very interesting. We've been talking about this for quite a long time, right? And we kept on saying that this could keep on staying stubbornly bid longer than most people can stay solvent, but the more we moved up an extension, the healthier it would be to see some kind of correction, right? For starters, what we're looking for a move back into around those 1750s, 1740s, something like that. And we had these levels marked up on the chart, right? So just a reminder, you can look at the old, the recent videos, but basically we said if we start to, you know, our outlook was to try to take tactical intraday shorts inside this area, but if anything, what we're looking to get, you know, short into 1812s, 1820, 1827s, and to the downside, the levels we're looking at was this whole 70s into 60s, then 55s, then 41, 34s. We had as marked on the chart, we had no interest inside this zone. So again, we had a very nice move here, double top, bam, breaks down, nobody to catch it, and it moves right back down into these 73s. Really interesting zone, because this was that previous double top that got sold, and a lot of people were starting to get very excited, and then it caught an extremely strong bid here, and then then continued back higher. So this is the real big question going into the week, and especially since it's a triple witching week. Are we going to find support here, and are we going to start making another run back up at the highs to finish up the year with a nice little rally, or are we going to see some more pressure on, and are we going to finally see that move back down below those 1750s? Okay, so going into the week, these will tend to be the zones I'd be looking at. Now, unless anything fundamentally changes, I would expect to see buyers coming in those 1750s into 1740s, and to continue to trade sideways or slightly up towards the end of the year, unless something really drastically changes on Wednesday with the FOMC, that being the main event risk here. But I think the quick move to the downside, we had a chance to trade that. It didn't move as aggressively as I would have expected it to once it started to get some momentum into those 1750s. And the big question is here going into the week, watch how 1770s behave for momentum going into the week, keeping in mind that if you just look to the left of the chart, very important level as we've discussed. Okay, now then what else we got? We got a lot of people asking about Aussie. So Aussie, we had this chart, and what we were saying, it was all and only about this 90 range, right? Once we started to close above 91s, we said as long as we close above 91s, we could start to get a bit of a build tone, catch a bid back into the 92.50s, but we had to break above these previous highs. You see, we never got a daily close above that, and we started to trade lower. We kept on saying, and I've been tweeting this for a long time, I got, much rather look to get long on the Kiwi for a number of structural, fundamental chart reasons, technicals, than try to fight the RBA, especially since every chance they're trying to talk down the Aussie, you're just getting into trouble. And if you've been doing this long enough, it ain't about trying to hit a home run fighting flows or fighting a central bank. We all know how that ends. So right here now we've closed below the 90 level, so clearly pressure is on. Now it's quite interesting here, because if you look at it even intraday on Friday, we got a bit of a 4-hour reversal here, chance to trade some to the upside. We were looking at that to scalp 20-30 pips to the upside at least, so clearly interesting action. What I would say going into the week is keep an eye on these 90s. Now, if this is going to be extremely technical in the way we move, one would expect to see price move back into these 90s, market to sell that, not to get a daily close above that level, and to continue moving back down to take a stab at those lows. Just a reminder, we are currently in a big swing short, as pure as they come. Highs to lows, back into the 50, back into the 200 moving average, and the target for that is 84.30s. Okay, so this is really going to be key to see how this plays out towards the end of the year. The only thing I would say is if we start to get back above the 91, I would not stay stubbornly short, because right here, the way this is set up, this is the best possible kind of scenario for the shorts to get a chance to smack this down and continue the move down. So if it can't, keep in mind that especially after a move like this, if the shorts start to cover and it can't get any traction to the downside, there are a lot of shorts, structural, tactical, whatever you want, that haven't been covering and have just been pressing. So there's a lot of covering to take place. So do not be surprised to see this pop right back into the 92.50s if we start to get some traction outside of the zone. This is the big sell zone to watch going into the week for continuation down, but it looks like it's taking a bit of a breather here. Now, what we talked about, and again, I don't want to get into the talk about, rates, who's going to hike first, whatever, but we talked about this Kiwi, and we said it's really interesting because this is a classical example of a chart where the shorts had a chance to really smack this down very, very aggressively, but clearly it can't, right? We had this move from highs to lows coming back down, the market trying to front run this right at the 200 moving average, so really pure long setup, which fails repeatedly, and bam, smashes through. At this point, you would not expect this fib to be a high odds fib. You would not expect this to hold, and it does. It holds, and we get right back above that 200-day moving average. And on top of it, what happens once we get some Momo above this 200-day moving average, right, and into all the data, etc., out of New Zealand, you see what happens on the rate decision. Once we come back down, bam, the 50 back level gets bought and aggressively moves back down. Market sells this very aggressively, you know, also on the Aussie news, etc. And what happens? Bam, it holds again, and it can't, right? So clearly, this is showing resilience. This is showing a chart of a currency that, or a pair that can't attract new sellers at lows, and it's just either attracting bids or shorts covering. So the way this is trading, and as long as this holds above the 200 on the 4-hour, as long as this is holding above this 50 back zone and the 200 on the daily, this looks like it wants to take another stab back into those 83.30s, which will likely be pivotal for a continuation of the move right back up into those higher levels or retracement. But again, it looks like it's holding a pretty good bid tone, okay? Now, what else have we got on the chart here? Euro and cable. So what's going on Euro and cable? Well, Euro, if you look at the weekly, we still closed here. Those previous highs are being defended. No change in outlook. We're looking for this to continue to try and rotate back into the 140, 141 into year end. Okay. Now, it's holding above those 37. So clearly it's had some trouble at those highs, but it's still holding. If you look at it on a daily chart, and this is one of the, you know, the dailies we're talking about with the three pretty, you know, textbook long trades here with the yellow circles. And again, it keeps on catching a bid. It keeps on catching a bid. It broke out of the two zones we're looking at in terms of a chop zone. So what I'd be looking at going into the week is a lot of people will be looking at some kind of double top here. But, you know, as far as I'm concerned, this is just a rotation higher into the end of the year. And unless something structurally changes in terms of the data and everything that's coming down, I would expect this whole 36.50 into 36 to hold for a continuation of the move higher. So this is the first big zone to watch going into the week. A lot of people will probably be looking at the 50 back retracement for those highs to lows that's coming in around 35.50s. Of course, that's an interesting zone, but remember the importance of this. You know, we talked about this chop zone we were in for a long time, 34.50, 34.00, 36.50, 36.00, right? Getting sold. Clearly interesting shorts here. Now, if this move's got legs, you would expect this to act as support and for us not to see daily closes below the 36s. If we get daily closes below the 36s, then I would not be surprised to see this come back all the way into this 100. So even 35.00 is not necessarily 35.50. So let's see how this plays out going into the week. Cable, what's going on cable? So we talked about this last week, and we said a lot of people getting excited with this reversal candle last week, and we said we had a feeling that this was a bit of a sucker's play, and we expected us to break higher simply because how this was trading around the 63.50. So indeed, we did print new highs, and we got a failure. So clearly, this is struggling. The other thing we said is that it was all about the 36.50, 63.50, 62.50, right? And we said do not get confused about velocity of range, do not get confused about the moves here unless we get daily closes outside. So you see what happened, we never managed to, even on the weekly, we didn't manage to get a weekly close above the 63.50, but we still didn't manage to get a weekly close here in the past 2 weeks below the 62.50, right? So if we're switching on to a daily or a 4-hour, you see how it's been very, very choppy, but it's still holding there. So here you can see the structure quite nicely. Bam, resistance, resistance. If this move is good, you'd expect this resistance to act as support here, okay? So going into the week, what I would be saying is you really want to look and see how we behave going very early into the week in the 62.50s, okay? If we can get a daily close below the 62.50s, then I would expect us to try and go and test the 61.00s. As long as we can't get a daily close below the 62.50s, I'd expect us to continue to rotate higher and try and take a stab at those highs again. Okay, so let's see what happens. Got a lot of interesting stuff on the wires this week. Let's hope it's a good one. Again, if you like the content, please don't be shy about sharing it, retweeting it, or liking it, or whatever. And I'll see you guys for London Open. Thanks a lot for listening. Have a great one. Bye-bye, guys.